You are watching Market Watch, the brief overview of the key events from the world of finance. Today is the last trading day of the week, month, and quarter. It is noteworthy that an important macroeconomic report from the United States will be published tomorrow, but investors and traders will be able to react to this release only on the first trading day of the second quarter, which will happen as much as 3 days later. We are talking about the basic price index of personal consumption expenditures in the United States. In fact, this index reflects the real change in inflation, so its decline may provide additional support to the stock market and pressure on the US dollar. When discussing the prospect of further growth of key stock indexes, it is important to take into account the risks associated with the growth rate of certain sectors and the apparent shortage of investments in others. It is also necessary to remember that the growth rate of stock indices significantly exceeds the growth rate of sales, which indicates the formation of a bubble. It's no secret that the main goal for investors is to make a profit. So now earnings per share have become so low that investors are more likely to expect an increase in the value of the stock itself for further sale. Consequently, the appearance of signals indicating a real slowdown in the US economy may become a reason for mass profit-taking. Once again, we are talking about gold, which continues to be in demand among professional investors. While most traders are actively discussing the regular updating of highs by the key US stock index, gold is not inferior to it. We are talking about the S&P 500 index, which ended the previous trading day with an increase of more than 0.6%, but gold also rose by almost 1/3%. The situation looks much more remarkable in the context of the month. Since the beginning of March, the S&P 500 index has grown by only 3%, while gold has gained more than 8.5% in price. This is another confirmation that institutional investors are waiting for a headwind. If the bearish scenario for the stock market is realized, then Bitcoin will also be under pressure from sellers. We have seen a sharp outflow of capital from Bitcoin ETFs, which most likely happened for two reasons. Firstly, the price has updated the historical maximum. Secondly, a correction followed, which forced investors to act extremely cautiously. Given all this, stock market sell-offs may increase pressure on Bitcoin and other coins. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.